it's Carter. Welcome back to the channel. Now in today's video, we are going to be talking about the top 5 rules that I live by when it comes to swing trading and trading stocks. So I hope you guys all enjoy this. If you do, smash that like button, subscribe. And if you guys want to learn more about trading, check out our school. It's called the Swing Trading Masterclass. We have private live streams, quizzes, lectures, a group chat. But more importantly, we actually teach you to trade. We teach you how to find undervalued stocks. We teach you our strategies, our mindset, our approach, everything that I've learned over the past 7 years of trading full time. So click that link, sign up, and I'll see you guys in there. And guys, let's jump into this. Now, if you guys are watching this video and you're going to ignore all of these rules, I'll tell you one thing, that if you do that, I can almost guarantee that you will not be consistent when it comes with trading in the stock market. Consistent, profitable. Trading is very, very difficult. And a lot of people have this mindset that trading is the easiest job ever, right? They sit on a beach and drink margaritas and buy a stock and they make $2,000 a day working 30 minutes. I tell you what, I work more than the average 9-to-5 worker. My hours are just different. All right. So rule number 1 that is so incredibly important, and one that honestly, if you get one rule out of the video, this is the rule I would want you to have. And it's plan your trade. Planning your trade is one of the most important things that most traders actually don't do. They actually will just buy a stock in hopes that it's just magically going to go up. There's no thought process on entry point, on risk management, on stop loss, and honestly, why you're even getting in the position to begin with. Most traders will just buy a stock based on emotion, but if you have a plan, it reduces the emotional tolerance behind that stock. Now, rule number 2 is a rule that I absolutely live by, and it's to trade high probable setups. For me and my approach, I'm not just buying random stocks. I have a checklist that is crucial for my trading. So my checklist entails, when it comes to swing trading, it looks like stock on an upward trend, sold off down to some sort of support line, like a trend line, a moving average line. Then we look at the RSI. Then we'll look at the earnings. We don't want to hold a position during an earnings report because of the risk. Then we go to some sort of lower time frame, like the hourly or 4-hourly chart. And we want to draw some sort of trend line and try to find some sort of breakout situation. Doing this and having good risk management and risking $1 to make $2 or $3 will really, really help your chances of being consistent, being profitable, but more importantly, have high probable setups. Because, with good risk management, even if your trades are, 50-50, you win 50, you lose 50, but you have good risk management, you're risking $1 to make $3, you're going to be profitable at the end of the year. So that's the approach you have to have. All right, rule number 3 is another very, very important rule when it comes with mastering trading in the market, and it's to preserve your capital. Losing is part of the game, but you have to learn how to preserve cash and capital. A lot of people think that risk management is all about making money, when in reality, it's about preserving your cash. In my opinion, I think no trade often is better than taking a sloppy trade. It's always better to choose quality over quantity. And if you're not 100% confident in the trade, don't even take it. Rule number 4 is to avoid over trading. When I first started trading, I was trying to literally pay for my bills. And, I felt this pressure to always be in a trade. And I obviously was taking sloppy trades. And before I knew it, I was losing money. So one of the rules you have to have is to not over trade. What are some ways around this? Well, the first way is to have a checklist. If you have a checklist where every stock you buy follows that approach, it will help you reduce over trading, because you're going to have to choose quality over quantity. Another rule for over trading is to do the rule of threes. So 3 winners in a row, you take a day off. 3 losers in a row, you take a day off. Doing this will help preserve cash, capital, and help you avoid over trading. Rule number 5 is to journal every single trade, whether it's a winner or loser, because you're going to learn more from losers, so you can focus on what's not working, so you can honestly don't even trade those setups. For me, I can't go a day without looking at my trading journal, and I'll actually put a link to my trading journal down below. It's like $20, but it's awesome. It's all digital. It's fantastic. It separates the strategies, the P&L, all that stuff. So check it out. But having a trading journal will literally help separate you from being profitable and not profitable, because you can focus on the strategies that are profitable in the market as of right now, and you can learn from your mistakes. mistakes. But having trading rules is by far one of the most important things new traders need to have. A lot of traders just go into the market willy-nilly expecting to make $1 million when they have no emotional tolerance or no emotion and no intelligence behind any decisions they make. So having rules will really help impact your trades in the better direction. So guys, I hope you guys all enjoyed this. If you did, smash that like button, subscribe. And if you guys want to learn more, check out our school. I'll see you guys in there. And guys, like, follow, and I hope you guys have a great rest of your day and take